Hey, this is attorney Elizabeth Potts-Weinstein, and today we're going to talk about the top 3 single owner LLC mistakes. So what is a single owner LLC? This is a limited liability company, a type of business entity that's only owned by one person. A member is just the name of the owner of the business. If you do a search online about one owner LLCs or single member LLCs, you're going to see a ton of articles that really are there to install fear in you about piercing the corporate veil and charging orders and all these kinds of things that can go wrong with LLCs based on some cases that have appeared in the last 20 years. But here's the thing. All the times that an LLC with one owner has had problems, the LLC owner did something wrong. They were using the LLC to do fraud. They were co-mingling all their money. Usually it was some incredibly non-legit business that they set up, sometimes with like all these multi-layered LLCs to hide assets and stuff. That's probably not your situation. Most of you, hopefully all of you, are not using your LLC to commit fraud or do anything sketchy. You're just trying to run a business. So today we're going to talk about the top 3 things that single owner LLCs do wrong that can get them in trouble so you can easily avoid those problems. Number 1 is to not commingle money. So what do I mean by commingle money? The LLC is a separate person, a separate entity from you personally. And yeah, you're the only owner, there's no other owners to complain about it, but you still have to respect that that LLC is separate from you personally. So how do you show that respect to your LLC? Well, the first thing you do is you don't mix the money up. You have a separate bank account for the LLC, a separate PayPal for the LLC, separate credit card for the LLC. You don't have to necessarily have a credit card, but I think it's a great idea because a lot of online accounts you're going to use for your business, a lot of services, you have to have a credit card to sign up for them. So you want to use the business's credit card. The business needs to have its own merchant accounts. Everything for the business has to be under the name of the business, under the name of that LLC. You also want to have separate bookkeeping for the business. It doesn't have to be something like QuickBooks, something that formal. It could just be in a spreadsheet in Google Sheets or Excel. It could just be written on a piece of paper. But you have to keep track of the income and the expenses and show how you're keeping that separate from your personal stuff. The last aspect that people mess up all the time is you can't just use the business's money as a slush fund for your own personal expenses. There's some expenses that businesses typically will pay on behalf of employees and owners. They might pay for the cell phone services because you use them for your business, for example. But I'm not talking about that. I'm talking about using the debit card for your business checking account at the grocery store to buy your family groceries. That is never okay. I don't care that there's a whole bunch of money sitting there and that you're going to pay it to yourself anyway. You have to go through the formality of paying yourself a distribution, which just means transferring the money to your personal checking account and writing that down in your bookkeeping that you paid yourself a distribution, and then using your personal checking account, your personal debit card, your personal credit card to buy those groceries. The second mistake that single owner LLCs make is they don't observe formalities in their paperwork. So what am I talking about there? I can't tell you how many times I've had a new client where I look at their LLC and their LLC doesn't exist anymore because there was some annual filing that they missed. You're going to have, no matter where your LLC is, you're going to have some annual filing you have to do to some government entity. It could be an annual report. It could be a statement of information. It could be an annual tax form that you have to fill in, your business license. There's all kinds of annual things you're going to have to do. What those annual things are depends upon where you're located and the kind of business you have, but you need to look that up and do those filings. Otherwise, your LLC will just disappear. Sometimes you can fix it by paying all the back filings, and sometimes you kind of have to start over again. So make sure that you do all those annual filings that are required. The next aspect of this is the paperwork that's more internal. So having a LLC operating agreement may not be legally required, but you definitely want to have one. It's weird to have a partnership agreement with yourself, but that kind of formality will be helpful if you ever have to prove that your LLC is legit. Another thing you want to do is anytime you do something huge for your LLC, you apply for an SBA loan, you loan money to the LLC, or the LLC loans money to you. Something big like that needs to be done via paperwork. So you need to have formal resolutions or minutes from a meeting that say that the membership of the LLC, the owners of the LLC, approve this action. I know that seems bizarre to have to write down something like that, but that's how you're going to show the paper trail of how you treat the LLC with respect. Also, if you're going to do some kind of self-dealing, like you're going to loan money to the LLC or the LLC is loaning money to you, there needs to be interest charged on that loan. It seems weird to do that because you're kind of loaning money to yourself, but you're not loaning money to yourself. It's an LLC that's separate from you, so it needs to be a legit business transaction that if there was another owner, they would require you to do that. The third aspect is you need to make sure that your LLC is capitalized. What does that mean? It means it needs to have some money inside of it. The bank account needs to have some money. What that amount of money is depends on the kind of business that you have. If you have a really simple service-based business and the only employee is you, the only person who works there is you, and you don't really have any inventory, that could be a relatively small amount of money, a couple $100, $1,000, something like that. If you have inventory, if you have to pay rent, if you have a much more complex business with a lot of risks to it, it may need to be thousands, tens of thousands of dollars. That's something that you have to look at for your particular situation. But you need to make sure that you don't just take every gosh darn dollar out of the LLC every single week, every single month, because then it's not really a legit business. If there was multiple owners, they would never let you do that. So think about, how would this business be run if you had to be accountable to another owner who wasn't your spouse or best friend or something like that? It's going to be like an outside person and run the business financially that way. Again, this is attorney Elizabeth Potts-Weinstein. If you have any questions about your LLC, feel free to ask them below and I'll try to point you in the right direction. Thumbs up if you found this video helpful, and subscribe if you'd like any more tips about your LLC or other legal issues for small business owners. Thanks a lot for watching. Bye-bye.